Hey everyone, it's Simi Shah, and welcome to Trailblazers. On this podcast, I dive deep into the journeys of trailblazing South Asians, sharing the stories of the leaders and dreamers lighting the way across the South Asian diaspora. Hello, my trailblazers. I am so thrilled to be back after our very short mid-season hiatus. And today I have an exciting announcement. We are hosting, another event, a breakfast for South Asian founders in the CPG space on Friday, May 19th in New York City. If you are a CPG founder, operator, or stakeholder, and you're interested in attending, please email us at southasiantrailblazers@gmail.com or message us on Instagram, LinkedIn, wherever you like. As always, we will continue hosting events for leaders in our space and community, as well as amplifying other community events in our newsletter. So if you haven't already, be sure to subscribe at southasiantrailblazers.com. With that, let's get to the very special episode I have for you guys. Today, I am thrilled to welcome Pooja Goyal. Pooja is the Chief Investment Officer of Carlyle Global Infrastructure, co-head of the Carlyle Global Infrastructure Opportunity Fund, and head of renewable and sustainable energy. In case you aren't familiar, Carlyle is one of the world's largest investment firms. They specialize in private equity and private credit. And with over 381 billion assets under management, Carlyle is one of the world's largest mega funds. Prior to joining Carlyle, Pooja was the head of the alternative energy investing group at Goldman Sachs, where she led Goldman's investments in the renewables sector. She's been investing in this sector since 2005 when she joined the group as an associate. She was promoted to managing director in 2012 and took over as head of the group in 2013. And under her leadership, the group built a portfolio of investments dedicated to the renewable energy and sustainable resources sector. Pooja has held several board and committee positions, including the boards of Vivint Solar and the American Council of Renewable Energy, and the investment committees at Altus Power and Goldman Sachs' America's Special Situations Group. Prior to 2005, she was part of the investment banking division at Goldman Sachs. Pooja is a graduate of the University of Pennsylvania, where she received a BS in finance from Wharton and a BAS in computer and cognitive science from the School of Engineering and Applied Sciences. She's on the board of advisors of the School of Engineering and on the board of trustees for the Ethical Culture Fieldson School in New York City. Pooja and I have so much to discuss in regards to her leadership at the intersection of finance and the future of energy. And as many of you know, I spent an early part of my career in the world of investing, which makes me all the more excited to talk to her today. Pooja, thank you so much for being here.
Well, first of all, thanks for having me here, Simi. I'm just so excited to be part of this podcast.
Absolutely. Now, as I said, we have a lot to discuss in regards to your leadership at the intersection of finance and the renewable sector and infrastructure, broadly speaking. But I found that when someone finds their niche early into their career, as you did, that propensity is usually rooted in their upbringing. And so I'm curious, in what ways did growing up in Mumbai shape your early interest in the world of energy and infrastructure?
It's so interesting that you asked that question, Simi. And I do think that people have a tendency to plan out their careers or their education, which will eventually lead to what we all hope are fulfilling careers commercially as well as personally and professionally. But growing up in India, I had your typical Indian upbringing where there was just a lot of focus on academic excellence. And that if you got the right grades, you would go to the right college. And then after that, I come from a family of serial entrepreneurs. And my father had told me at a very early age that the ultimate success of a business is quite dependent on the availability of capital. And so I knew that I wanted to study something in finance or end up getting a job in finance. So at least I would understand how financial markets work. So I would say that first and foremost, my focus was on understanding how capital markets work, and really how the financial system operates. And then after that, a little bit of it is coincidence. A little bit of it is what I ended up doing in college that ended up with me getting a job in the leverage finance group at Goldman Sachs. And I ended up focusing primarily on either placing complex insurance risks in the capital markets or capital markets risk in the insurance market or focusing on commodity-linked financings. And the way it happens on Wall Street sometimes is you end up getting pigeonholed almost quite early on in your career.
Yeah.
And so that's really how I got my foot in the door when it came to the commodity markets. And then after that, one thing led to the other. And I ended up specializing in the energy transition.
Super interesting. And I'm quite familiar with how that process works because I spent part of my early career in finance. And I'm curious, I mean, as you said, you immigrated to the US to attend the University of Pennsylvania. You followed a relatively traditional path of starting your career in finance in investment banking at Goldman Sachs. But your introduction to the firm started with a project on catastrophe bonds. Can you tell us a little bit about how that all came to pass?
Yeah, it was super interesting because I was studying under the dual degree program at the University of Pennsylvania. It is a fantastic program, which enables you to get 2 degrees from 2 different colleges at the university. So I was already studying for a finance degree at the Wharton School. And I decided to also get a degree in computer science from the engineering school. And I needed to find a job because 2 degrees meant a full course load, but I also didn't want to spend 5 years getting my 2 degrees. So I was accelerating my course load a little bit. And I wanted to support my parents also to a certain extent in terms of the obligation they'd taken on with my tuition.
Sure.
So I wanted to get an on-campus job. And so I started applying for these research jobs, which was a great way for me to get some sort of experience in terms of the practical application of what I was studying in the classroom. And there was this one research project, and it was a bit of a hybrid between the engineering school as well as Wharton. And it was around the study of catastrophe bonds, which is how do you take risks and losses associated with earthquakes or hurricanes, which are natural disasters or catastrophes,
Wow.
and you place that risk in the capital markets. And it just so happened that the previous students who'd had that job, they all came from this dual degree background. So I think they were somewhat partial to recruiting students who had that technical skill set. And then by the time I ended up applying for my summer internship to Goldman Sachs, one of my predecessors from that research program was already an analyst at Goldman Sachs. And they were working on these catastrophe bonds, which for me was like intellectually very exciting, where I could see a real world application to what I'd been studying at the university. And so that's really how I ended up getting my job at Goldman.
Wow. And, as you alluded to earlier, bankers and people in the world of finance are often corralled, if not pigeonholed, into specific industry groups pretty early on. And as a banker, you might work on everything from underwriting IPOs to massive M&A transactions. And you began your career in leveraged finance. Banking is, of course, a notoriously intense job, but I'm curious in what ways this experience helped cement your interest in the world of energy and energy transition and our alternatives.
You make such a good point. And I do think that that is a criticism for our industry, that we do tend to pigeonhole people or specialize people very early on. And that is where I did feel that my peers who had more of a network, either because they had family members who had worked at a bank previously or understood financial services previously, really benefited from just mentorship and guidance. And coming out of university, I still remember, joking around about this. When I was a junior, applying for internships at an iBank. We used to all call it iBank. For the longest time, I thought it was internet banking. I didn't know that it stood for investment banking. And so, I do feel that in order to make the industry more inclusive, we need to allow for people to have mobility
Absolutely.
or develop more flexible skill sets so they don't get specialized so early on in their career. Because in the absence of that mentorship and guidance, it becomes very, very difficult to try to do something else. But I will say for me, working in leverage finance at Goldman, I almost turned around that narrative where it was a lot easier to explain to people if you had worked on a large M&A transaction that was on the front page of the Wall Street Journal. And I said that while I might not be doing that, I was also not using your standard M&A model. Because of the complexity of the deals that I was doing, I was able to build these models from scratch, really understand the nitty-gritty of how these different balance sheet work, how to think about raising money for transactions or assets in the commodity markets. And it kind of gave me an edge. So I almost use that to my advantage a little bit while talking to people, which is that, yeah, these might not be the most topical deals that people were reading about in the newspapers, but I was creating almost like a proprietary skill set. And maybe one day that would be of use to someone.
Wow. I mean, I spent a summer in banking and then I started my career in private equity, but I remember even in my intern years, so much of the conversation would be that people working in Lev Fin have the toughest job, and the models that they were building and the analyses they were doing were just not comparable to any other industry group because they were so complex, to your point. So it's really interesting how you took that and turned it into a strength when you were having these conversations.
Yeah. And, layer on to that, the complexity of commodity markets, understanding how gas markets work or power markets work or even the oil markets work. It's completely different. And those markets can oftentimes get disrupted with events that might not be related to what's happening in the capital markets either. Weather patterns can have an impact on commodity prices. So, look, it was intellectually interesting to me. Oftentimes people have a tendency when choosing their first job or even subsequent jobs, they tend to go where the tide is or catch the tide rather. Yeah. And, I always say this to people, which is find something that is intellectually interesting to you and the rest will follow. If you continue to find it interesting, you're continuing to be challenged, you're learning. You do have to be strategic about planning your career, but first and foremost, you got to feel like you're really learning and pushing yourself, at least in the early innings of your career.
Absolutely. I appreciate that, and definitely advice I will continue to take to heart. Now, after spending 3 years as a banker, you decide to switch over to the buy side. You joined Goldman's Alternative Energy Investing Group, where you eventually became a managing director and served as head of alternative energy investing. What was it like making the transition to role of investor? And aside from the obvious, what drew you to this role and this sector?
Well, it's very simple. It was the lifestyle that made me put my hand down. And I said that I wanted to move to the buy side. It was incredibly hard being in investment banking at Goldman. It is a fantastic training ground. You learn a lot. You work with management teams of small to mid-sized companies, all the way to companies that have a market cap in the tens of billions of dollars. And you're working with some incredibly smart and talented people. But yes, it really was a decision that I made. I think even today, sometimes when my friends and family look at my 3 years or that time period for those 3 years when I was in Goldman banking, I'm just missing from pictures. I'm just not there. And so it was a lifestyle decision where I put my hand up and I said that, look, I would like to move to the buy side. I will also say by that point in time, I had a lot of my friends and peers who had moved to the buy side. And it wasn't that you worked less hours. It was more that the hours tended to be a bit more predictable. Yeah. And so that gives you some, sense of control over your schedule. I think it was the lack of control that at least bothered me. And I felt like I was ready for a change. The second thing, which is also equally important, if not more important, was that I did conclude that in order for me to have more visibility on how I would be compensated or promoted, I needed to own my own P&L. And the clearest way for me to do that was to move to the buy side, where you either make money or you don't make money. And so that was a very deliberate decision that I made. And, I'm not the sort of person who generally thrives in ambiguity. And I like to control outcomes and fully recognizing that you can never control outcomes, but I would like to influence them as much as possible. And so I wanted to have P&L associated with my name, which is why I decided to also move to the buy side. I was very happy with my time at Goldman. And so it would be obvious for me to at least see if there would be another opportunity there. And it just so happened to be that the special situations group at Goldman was looking for someone with a corporate finance background who understood how commodity markets worked to join their alternative energy investing business, which was basically the business that was investing primarily in renewable energy assets, as well as clean coal and those kind of energy transition projects.
Yeah. And as you just mentioned, you had the opportunity to invest in private and public companies across the energy sector, coal, as you said, natural gas, power grid, solar, wind, I assume. Can you tell us about some of the meaningful investments you made while at Goldman? One that taught you a particular tenet of investing or that was just personally very impactful?
That's an interesting question. I guess the one deal that's always been quite close to my heart was actually a business that we incubated from scratch at Goldman. It was called Vivint Solar. It's a residential solar platform. And at that time, Goldman in SSG, through another business, not the alternative energy business, already had a relationship with this company. It was called Vivint, and it was a home security business where this company went door to door selling home security systems to customers. Incredibly talented management team and employee base. And we had a specific thesis around residential solar in the US. This is right around the 2009 or 10 timeframe. And we concluded that this was a market that was positioned for a lot of growth, the residential solar market, especially if you could bring clean and green energy to US homeowners where it would cost them no money up front and save them some money on their utility bill. And so it was an economic value proposition. It wasn't just about saving the planet and procuring renewable energy, but there was a savings to be had. But one of the key drivers of success for that business has to be your customer acquisition cost. And so we concluded, because we already had access to this business that had very attractive customer acquisition costs in the home security space, maybe we could leverage that into residential solar. And so it was almost like coming up with a business plan from scratch with the management team. And it was just incredibly fulfilling. And it obviously ended up being a very successful company. Even today, when I fly into Salt Lake City and I see the Vivint Arena, it just makes me incredibly proud. We eventually sold that company to Blackstone.
Wow. Very, very cool. Now, while you were at Goldman, you rose to senior leadership fairly quickly as becoming head of the group just 8 years into your career as an investor. What do you think set you apart?
There were a lot of changes at Goldman. So I joined the special situations group in 2005. And then we had the financial crisis in 2008. And so that was incredibly interesting, sitting in a balance sheet investing business in the middle of a financial crisis. I guess there were many moments in time where you would wonder about the long-term viability, about the renewable sector, energy transition, the viability of balance sheet investing, also sitting at a bank that was becoming a bank holding company. I guess for me, it was more that I, again, gravitated towards what I could influence, which is doing deals and whether those deals made money or not. And I guess I didn't look up too often to be questioning where things were headed, let's say 3-5 years down the road. I'm not necessarily saying that is the advice I would give to everyone, because I do recognize that I've been incredibly fortunate that the energy transition has become so mainstream. I know plenty of examples of people who are incredibly talented and got pigeonholed, focused on niche parts of the capital markets. And sometimes those things have gone sideways as well. So what worked for me was that I kept focusing on deals and the deals, whether they performed or not. But that worked well for me.
Absolutely. I want to dig in on what you said about getting into this space early on when there were still a lot of questions about the long-term viability of renewables. In recent years, we've seen the rapid rise of alternative energy investing and just the broader concept of ESG, environmental, social, and corporate governance. As someone who's been in the industry for over almost 2 decades now, what's your take on seeing the pendulum swing back and forth in this way?
What I do at Carlyle and what I also did at Goldman was first and foremost invest capital with a view towards generating our target return. That's our primary focus, which is we're focused on commercial outcomes. Even when you think about the renewables industry, the example that I used for residential solar, in order for a business to be viable, it needs to be commercially effective. It needs to be profitable. Selling resi solar power to customers was less about procuring renewable energy. It was more about customers saving 10 to 20% on their utility bill. Interestingly enough, our customers tended to be the suburbs or middle-income households or communities that cared about saving $50 on their utility bill or $60 on their utility bill for no money up front. That's where we got the most traction. And so that commercial orientation has to be your primary focus. And that is really what's guided me through my investing activities as well. And so I think that, these kind of discussions always tend to get complex because people think that there are trade-offs. And our belief has always been that you focus on your commercial outcomes and then the rest will follow.
Interesting. Very, very interesting. Appreciate you sharing that. Now, as you said, in 2019, you joined Carlyle as a partner and served as head of their renewable and sustainable energy fund. What drew you to Carlyle after spending the bulk of your career at Goldman?
Well, Carlyle has a fantastic brand name as an investment firm. It really is a storied brand name. Our founders have a fantastic reputation amongst the investor community. So I would say that coming from Goldman especially, as much as I would have liked to maybe even start Pooja Goyal Investments, LLC, I tend to look at things on a downside protected basis. And Carlyle was just a fantastic brand name. The second was, it was getting a little complicated to invest out of a bank's balance sheet. And ultimately, I was looking for a lot more flexibility in terms of being able to work with the management teams that I was partnering with. And an investment firm offered that flexibility. But really what moved the needle for me was that Carlyle's vision around the energy transition was really very much consistent with what I thought the market opportunity was back in early 2019. And if you think back to 2019, renewables or the energy transition was not as mainstream as it is today. Back in 2019, most of Carlyle's peers invested in renewables or the energy transition more as a subsector within a broader diversified fund, whereas Carlyle really took the view that, look, we think that this is a multi-decade opportunity. And it needs a dedicated platform to be able to really capitalize on that opportunity. And that is what I thought it was at that point in time as well. So having that shared vision really is what moved the needle for me. And then obviously the benefit of the platform itself. The other thing is that you come from a large company like Goldman Sachs and you're joining on a relative basis, a smaller investment firm when it comes to number of people, number of employees.
Sure.
I did do my due diligence. I did ask people a lot about the culture. And this has been my experience also at Carlyle. It's an incredibly collaborative culture. And women are a significant portion of our investment professional population at Carlyle. In fact, almost 50% of our AUM are managed by women. That is an outlier.
I saw that.
And so that made a difference as well.
Yeah. I want to backtrack a little bit on something that you said about switching over to something that had more of a pure investment mandate because it gave you the opportunity to work more closely with management teams. As an investor, you have the opportunity to sit on boards of companies that are innovating in this space. And I'm curious, having had this experience, what trends you've become attuned to and what you've seen develop in this space over the past number of years.
Yeah, I mean, I have to say that is the most exciting and fulfilling part of my job, which is working with these management teams, with these CEOs and founders as they are looking to kind of execute on their vision for the energy transition. That is probably the most fulfilling part about my job. I really enjoy it. I do enjoy even spending time with my investors, especially because it's a fairly diversified set of investors globally, and everyone has different challenges that they're dealing with. But I really do like rolling up my sleeves and getting involved with the management teams in terms of, how to execute on their business strategy. And we are in a very complex environment right now, specifically around the energy transition. You've got complex geopolitical factors at play. You've got inflationary pressures. You've got supply chain related issues. But then you're also in a sector that's positioned for a tremendous amount of growth right now. And that growth requires a lot of capital. And then you are seeing interesting capital markets right now, both on the equity as well as credit side. And so it's just incredibly interesting to be working with these management teams. And I oftentimes find that I actually learn a lot from these teams as well when it comes to building the right organizational structure, establishing the right culture within your organization, recruiting as well as retaining talent in a very competitive market for talent right now, especially around renewables and the energy transition. So it's just been incredibly fulfilling working with these management teams, and the set of issues keeps evolving. And so it keeps you on your toes.
Yeah. I want to spend a second on that the set of issues continues evolving. I mean, take me, a novice in this sector. What are the biggest challenges we're facing in this sector today, and how has that evolved? I mean, I've heard you speak a little bit at times about how the 1.0 evolution of this industry was around renewables. What's 2.0? What's 3.0? Where are we at today?
So, 1.0 was obviously renewables. 2.0, you are talking about batteries and electric vehicles and charging infrastructure, green hydrogen, green ammonia. So you're definitely, the opportunity set is expanding. In terms of the complexities in front of us, obviously, look, you've got to deal with higher interest rates. That means your cost of capital has gone up. You're dealing with inflationary pressures. I would say that those kind of issues are pretty much par for the course for any illiquid equity strategy right now. One could argue even for liquid markets. But for energy transition specifically, having been an investor in this market for over 18 years at this point, and I've seen the roller coaster around energy transition, there have been plenty of ups and downs. The thing that I always get concerned about are momentum investors. So people who aggregate pools of capital or who make investments simply because it is mainstream and topical. And these are complex projects. They're expensive projects. They require time. They require expertise, resources, and a lot of capital. So anyone who's in for a quick flip or to be in and out of the market or draws an analogy to tech investing, it's simply not the same. It is very different. And so that is one thing that always concerns me a little bit about renewables and energy transition, which is the noise that gets created by momentum investors. Because to the extent there are winners and losers, if there are losers, it always taints people's experience with the sector. And that does a disservice not only to investors like myself, but also to management teams.
Yeah, absolutely. And I mean, you are obviously the antithesis of a momentum investor. You dug your heels into this space back in 2005, pre-financial crisis, pre all the hype that we see today. What gave you conviction back then?
Oh, I wouldn't say I had a very high degree of conviction consistently for the last 18 years. I do think there were moments in my career where I was really questioning my career decisions. I think it's what I said, which was that, look, as long as you're finding deals to do and you have the capital to do those deals, keep doing those deals. That's my job as an investor. First and foremost, it is to find deals, do deals, and generate target returns. If you're doing that, the rest will follow. And so maybe I should have been a little bit more proactive about the bigger picture. I know everyone talks about a 3-year plan and a 5-year plan. And, I didn't focus as much on that. But as long as I was finding the deals to do and those deals were making money, I was generally okay with what I was doing.
Yeah. Well, clearly it worked out because today you serve as Chief Investment Officer for all of Carlyle's global infrastructure, in addition to being co-head of the Global Infrastructure Opportunity Fund and head of renewable and sustainable energy. Can you contextualize the broader infrastructure division and what all of these roles entail?
Yeah. So look, we've got one integrated infrastructure platform at Carlyle, and there are really 5 sectors that we focus on. We focus on transport. We are redeveloping New Terminal 1 at JFK Airport.
Exciting.
It is incredibly exciting. It is very easy for me to explain to my 2 young daughters exactly what it is that I do every time we fly in and out of JFK Airport. We also invest in digital infrastructure. So that includes data centers, fiber, towers, and telecommunications infrastructure, energy, midstream infrastructure. So that's pipelines, storage terminals, tanks. We also have a focus on water and utilities. So those are your classic utilities, water, gas, wastewater utilities. And then the 5th sector, which is the one that we're seeing a lot of growth on, and that is kind of more correlated with what I've done historically, is the energy transition space, which includes renewables as well as, what I referred to as energy transition 2.0.
Yeah. End to end, can you walk me through what happens when a potential opportunity comes across your desk? And specifically, I'm curious, every time I talk to seasoned investors, there are certain individual principles that they've developed over the years, just as a product of seeing as many deals as they've seen. I'm curious what yours are.
Yeah, so we definitely have some very basic parameters around check size,
Sure.
target returns. We focus a lot on portfolio construction. Is this the right deal for where we are in our portfolio construction as we think about, how we build robust portfolios that offer the right diversification as well as return potential for our investors. So portfolio construction is incredibly important to everything that we do. And time and resources are incredibly precious. So we have a limited number of investment professionals and we can't be chasing every single deal that comes our way. So sometimes we do have to turn deals down because it just might not be the right moment in time for what we're looking to do within a certain portfolio or strategy within our platform. At the end of the day, when we're looking at deals, number one, we care about the management team. Who is running the company? What has been their track record in terms of running the platform? Yes, we can get involved in situations where we can make changes, but we would like to understand the talent and the caliber of the management team. And hopefully that is a check on the list. So A, what does the management team look like? B, are there barriers to entry? Is there a moat around the business? What is it that the company does? Do they develop assets or do they own and operate existing assets? And my analysis might be different from a private equity investor that you're talking to because I tend to focus more on asset-oriented investments. So either those assets are in the ground and already operating, or otherwise those assets are going to be developed. And so what is really the secret sauce around what the company does? Either they have a unique strategy around developing those assets, or those assets are monopolistic in nature or have high barriers to entry in terms of can you have competing assets around that? And then after that, having come from commodity markets, we always want to make sure that you are competitive with the marginal cost producer for the commodity market that your product is going to be active in. So, that is where we get into discussions around government subsidies. In general, we do not like to underwrite any future government subsidies in order to make our investment successful.
Super interesting. I mean, it's very clear and obvious that you're very good at what you do. What gets you up in the morning and excited to go to work every day?
I really enjoy the people that I work with. We have a good group of people here at Carlyle, and there is a level of care at Carlyle as well. So it is incredibly collaborative. It's also kind of been cool for me, from day one, 2019, I built my team from scratch. And we're a relatively new and emerging business. And so it's given us an opportunity to establish our own culture here. And that's been exciting. So it's definitely the people. I actually prefer coming into the office every day because I just want to run into people in the hallway and talk to them. It's very organic, the interaction. So I enjoy the people that I work with. But it's really what I said, that at the end of the day, you're working with these companies and helping them execute on their vision. And that's just super exciting.
Yeah. In that same vein, there are a lot of people who work in this space that feel a lot of existential dread around climate and just where this industry is broadly heading and where the world is broadly heading. Do you ever grapple with that? I mean, how do you deal with that?
Yeah, I mean, as a parent, right, I do think about it. I do think about the studies that come out. But like I said, I tend to gravitate towards things that I can focus on and influence. And I've been
Yeah.
fortunate in the sense that I'm not just reading about climate change. I'm not just reading about energy security. I'm actually able to make a difference. And that's pretty neat because you don't generally tend to find careers where there is kind of that overlap between your personal goals as well as what would be a economically lucrative career.
Absolutely. I mean, it's definitely hard to exist at the intersection of the two. And I think most people are trying to find how they can. I want to spend a second on the causes of some of that dread. And it's, for example, I remember I studied government in college, and we would often talk about the concept of race to the bottom, whereby a lot of nations compete by lowering their environmental standards in hopes of attracting foreign investment and just broader industry. And this relates to obviously broader conversations around global climate agreements like the Paris Accords, where developing nations who haven't necessarily industrialized as much as we have are saying, it's not necessarily fair that suddenly we have to abide by these rules. But the point being that global warming is a very real thing, and we all need to work to mitigate our impact on climate change. How do you feel as an investor you help accelerate that transition and accelerate that buy-in?
It's a question that comes up quite often. And the question also comes up in the context of, does private capital have a role to play in infrastructure or generally speaking, the energy transition? And I will tell you, every single day, I am reminded that private capital has an incredibly important role to play. It's because these companies and management teams that we're working with are dealing with some complex issues. And sometimes they also need expertise and resources to think through them, but also capital that has patience and is able to withstand volatile market conditions. And so private capital has an incredibly important role to play. Now, I'm also not the sort of person who says that, private capital can only play a role in isolation. I think there are plenty of examples of public-private partnerships not only between private equity firms, local governments, but also including strategics, and that may include oil and gas companies as well. You will have to show flexibility around creating these kind of collaborative ecosystems where everyone can come together, share expertise in order to make these projects successful. So, I do think private capital has a role to play, and that role will not just be in OECD markets. It can include emerging markets as well. The only thing I would add to this, and this is more of my experience as someone who grew up in India, you cannot be prescriptive and you cannot step into complex jurisdictions and assume the same rules apply. You need to show a little bit of flexibility, which might also include the pool of capital that you're deploying out of. But you need to be able to adapt and be flexible if you're operating in markets where you've not historically operated before.
Yeah, I appreciate the deep insight because, again, I think it's a conversation a lot of us are having, often superficially, because climate is such a hot button conversation right now. You've worked at two stalwart institutions in the financial sector at the intersection of energy and energy transition. And today, as you said, you're building a new business for what has been a long-standing institution. What is the most rewarding part of the job?
I mean, nothing is more rewarding than having a successful investment and a successful exit.
Yeah.
That is incredibly rewarding. I do think building a business of scale is just incredibly important. And the reason that is the case is because that growth kind of permeates through the organization. Like I said, I built my team from scratch. We believe that we have a shared mission here at Carlyle, and just seeing people get excited about milestones that we're hitting is just incredibly fulfilling because we feel like we're well on our way on executing on that mission. So just seeing that enthusiasm and energy kind of permeate through the deal team has been incredibly fulfilling.
Absolutely. And obviously, no institution is perfect, but private equity over the last number of years has faced its share of scrutiny, as even though they've oftenly invested and oriented towards ESG, they're often regarded as contributors to the climate crisis from a dollar's perspective. How do you grapple with that? And what do you say to people that are sort of trying to deal with this paradox in their minds?
I mean, look, at Carlyle, we have a fantastic ESG practice. We were the leader in terms of the ESG data convergence project. One of the most important things for us has been that you not only need to set up ESG reporting metrics, those metrics need to be standardized as well. And we were able to get important LPs as well as other GPs to sign up to that ESG data convergence project. And that has just been something that's made me incredibly proud about the leading position Carlyle's taken amongst kind of the investment firm peer group. And candidly, I'll tell you, Simi, that's been an important recruiting tool for me as well. People who join my team, obviously they are focused on climate change, they are focused on the energy transition, but they also want to be part of Carlyle because we are one of the leaders when it comes to thinking through these kind of complex issues.
Absolutely. You've achieved remarkable heights in the financial world, but I also imagine that it wasn't easy, particularly when you were getting started as a woman of color, as an immigrant. I mean, today you're a mom. How did you surmount those barriers to entry and avoid being intimidated, not just by the dollars at stake, but the cultural environment?
Maybe that's where you say ignorance is bliss. I never kind of walked into a room and said that, oh, geez, it looks like I'm the only woman here, or I might be a minority woman here. I guess, I never really thought about that. I was too focused on whether I knew what I was presenting or I was prepared for a negotiation session. And so maybe that has helped me a little bit in terms of dealing with that. Having said that, the most complex thing I've done, or I'm still in the process of doing, is being a parent. It is incredibly hard. It is incredibly humbling. And maybe I can tell you 15 years from now whether it worked out or not.
I'm sure it will.
So I don't know about that. I think that has been the challenging part. So of all the things that you mentioned in terms of the complexities of being a woman, an Indian woman, the one thing that I still constantly deal with is the fact that you've got 2 kids at home and you have to do your job. I mean, it is constant triage.
Yeah. I want to spend an extra second on that because, as you mentioned, Carlyle very uniquely has almost 50% of its assets under management managed by women, which is quite incredible. I mean, what have they done to foster that growth? And how personally do you think about balancing your roles in all these senior positions at Carlyle while also being a mom at home?
They're incredibly supportive. It is an incredibly supportive organization. And by being supportive, I don't just mean they are providing me with resources and all, but just being able to talk to other women at Carlyle who understand that you're managing a portfolio, you're managing a team, and you may be potentially working with various stakeholders, including investors. It is a complex set of issues. So getting that guidance and mentorship is important. I'm not really talking about sponsorship here. I'm just talking about practical advice that's been incredibly useful. So, I mean, of course, we've got different kind of employee groups that also provide support. We've made investments in developing our talent as well. We provide executive coaching to members of our team, but it's more of the organic interactions that result in practical advice that has been incredibly useful to me. I have said this before and I will say it now, which is that, look, Carlyle hired me as a fund head when I was relatively young with very young kids in preschool, and they didn't bat an eye. They supported me, and that's just been quite incredible. So I really do believe that Carlyle puts its money where its mouth is.
Yeah. Well, I love to hear that. It makes me very happy. And it's, like I said, the whole point of Trailblazers is for us to have a line of sight to leaders like you. And it's really incredible to see them making strides in this way, but also to see you there doing that, making those strides for us. Today is obviously, it's a challenging time in that the financial system is relatively unstable, which has 3 banks have failed, which has a ripple effect on the grander part of our economy. being someone that's lived through 2008, lived through a lot of volatility, just given the sector and space that you're in, what are some learnings you can share with aspiring young professionals who are looking to start their careers in the financial sector?
I just have to say it is an incredibly attractive learning opportunity right now. I mean, think about it. We've not had these market conditions really since the financial crisis. And as an investor, nothing gets me more interested than these kind of market conditions. It's an incredible opportunity for people across all levels, whether you're starting off your career or you are a business leader. It is a learning opportunity. I would also say that learn from people around you, but also learn from what your clients are doing or your peers are doing, and make sure that in your interactions with everyone around you, you're not transactional and you're really thinking strategically. Because you know what? If you are there for your clients right now and you're able to think through various iterations and give them good counsel, they will be there for you when you need them as well. And so, just thinking through strategically in terms of your relationships and your interactions with people is incredibly important versus just focusing on what's happening in a particular moment in time right now. But it is an incredibly important learning opportunity right now.
I love hearing that. And it reminds me of a piece of advice I received when I first started my career in private equity. And we were being assigned portfolio companies. And they said, everyone wants the portfolio companies that are smooth sailing, have no problems. But they were like, the place where you learn the most is in the companies that are struggling and really going through it. And I feel like that's exactly what you're saying, is that there's an incredible opportunity to learn right now because market conditions aren't perfect.
Yeah. Just make sure you don't get pigeonholed as the workout person either.
I believe it. I believe it. Now, I have to ask, you're a seasoned investor who's been in this space for, as you said, almost 2 decades. And I know you alluded to the idea of Pooja Goyal Investments. Would you ever consider starting your own fund?
No, I'm incredibly happy at Carlyle.
Well, thank you so much, Pooja, for being here. Really, really appreciate you taking the time to share your story. And I personally enjoy it because, again, I spent a formative part of my life in this arena. And it's really exciting to see women like yourself trailblazing the paths that you are.
Well, it's incredibly exciting to see what you're doing, Simi. Your content is excellent. And so thank you very much for including me. But keep doing what you're doing. It's such an important avenue for young South Asians out there, and even those South Asians who are established in their careers. So keep doing what you're doing.
Absolutely. And I can't wait for your daughters to listen to this episode in 15 years and hear what they say. Thank you.
Thank you.
Thanks for joining us for today's episode. If you want to get new episodes straight to your inbox, subscribe to our newsletter at southasiantrailblazers.com and follow us at South Asian Trailblazers on Instagram, Facebook, and LinkedIn.